But discrimination isn't always that obvious. It's sometimes more subtle, but in many ways more insidious. And institutionalized discrimination that's hidden behind a smiling face. Housing agents who say, well, there are no vacancies right now. That you just didn't qualify for the mortgage because your financial credit history wasn't good enough. Last year, the Federal Reserve Board found African Americans are denied credit for homes at twice the rate white Americans are. And it is pervasive. It's what we found in the banking case in Texas, SacuBank in Texas. Discrimination in lending, discrimination in rendering mortgages. The bank has agreed to change its practices, as you heard from the Assistant Secretary. The bank has also agreed to a $2.1 billion agreement where they'll make $2.1 billion available to families who are low and moderate income across the country for mortgages. About 15,000 low and moderate income people will now be able to buy their own home because of the settlement we announced today. $2.1 billion is by far the largest settlement ever rendered to the federal government to settle a fair housing case. And in closing, the message of today is clear. You've heard it from a number of us now. This is a nation of laws, and this administration will enforce the laws. We'll take questions at this time. Yes, sir.
This money and presumably...
Well, $2.1 billion that would not have been available to families of low and moderate income, low and moderate income families across the country. About 15,000 families we estimate will get mortgages who would not have gotten mortgages otherwise. But aggressively to take a greater risk on these mortgages, yes. To give families mortgages who they would not have given otherwise? Yes.
Get the loans at all. They wouldn't have...
They would not have qualified but for this affirmative action on the part of the bank, yes.
Minorities are represented in that low and moderate income group?
It is by income, and is it also by minorities? Yes. With the $2.1 billion lending that amount in mortgages, which will be a higher risk, and I'm sure there'll be a higher default rate on those mortgages than on the rest of the portfolio, that is the remedy that we sought, and the remedy that I would prefer, 15,000 families. This is of a scope so beyond anything that we've really done in the past.
I've been a community organizer and helped design programs at the ground level. You know, I have a background as an attorney. I've represented affordable housing organizations that build affordable housing, something that's a major issue in the district.
You've gone back to Chicago, right. And civic rights, civil rights.
Right. You know, I'm currently a practicing civil rights lawyer, which means that I get involved in a whole range of different issues that touch on issues of race.
What do you think is to blame for this current mortgage and credit crisis? Who do we see about that?
Well, I think there are a lot of folks who have to take some responsibility. The original idea was a good one, which was, let's see if we can distribute risk more broadly and make it easier to provide loans to people who otherwise might not be able to get them.
Well, one of the groups at the center of this financial crisis is a so-called community activist group known as ACORN. In point of fact, ACORN is a left-wing special interest group now under investigation for embezzlement, voter fraud, and providing mortgages to illegal aliens, among other things. The group, ACORN, lobbied Congress for years to allow more of those risky mortgages that in part led to this crisis. And now, ACORN stands to reap hundreds of millions of dollars from a government bailout of Wall Street. Lisa Sylvester has our report.
ACORN, the Association of Community Organizations for Reform Now, rallied in front of the Miami Federal Reserve Bank. The group is pointing fingers at Wall Street for causing the financial meltdown. But critics say this community activist group shares the blame.
They've always lobbied Congress to do everything they could to make more and more, or force banks to make more and more loans to low and moderate income people, which is a very noble sounding goal. But unfortunately, they have contributed to the financial ruination of thousands of low-income families.
It goes back to something known as the Community Reinvestment Act that passed in 1977. The law ordered banks to make loans to low and moderate income people. The Consumer Rights League says Acorn stepped in and used that law to pressure banks to lend to subprime borrowers, even those who couldn't demonstrate the capability to pay back the loan.
Back in the early 90s, they would stage protest at banks that, they sued them for redlining. They were engaged in legal action.
Enter deregulation in the 90s. Then Fannie Mae and Freddie Mac began purchasing these mortgages and selling them to private investors. And the subprime market took off. Former Clinton administration official Franklin Raines, who ran Fannie Mae, amassed $90 million in 6 years he ran Fannie. Homeownership was up, which pleased groups like Acorn, and Wall Street made a ton of money until home prices started falling. But
this is a straightforward deal for Acorn and other groups, left-wing groups, set up by the Democratic leadership of Congress. They're not interested in the bailout per se. They want to spread this out. And as many people believe that this bailout in part is dear to the Democratic leadership because they want to advance a social agenda here as much as an economic bailout of Wall Street.
Yeah.
Let's consider a few of the public officials involved here. Congressman Barney Frank of Massachusetts speaking in 2003, quote, "I would like to get Fannie and Freddie more deeply into helping low-income housing.
Yes.
I want to roll the dice a little bit more in this situation towards subsidized housing," close quote. What was Congressman Frank thinking?
He was thinking of getting reelected. Because when you do favors of people, those people are more likely to contribute to your campaigns. They're more likely to vote for you if they're in your district. And so all of this is perfectly understandable from the standpoint of Congressman Barney Frank. So is his more recent statement that he wants the Fannie Mae and Freddie Mac to lower their lending standards for condos now. In other words, lowering the standards for housing was such a big success, he's now going to move on to the condos. Presumably he'll eventually get to the apartments. All right. He wanted the federal government, particularly the Federal Housing Administration, to make loans so that people could buy a house without a down payment. He thought a down payment was just one of those fussy things that the market had come up with. You know, and as so often happens.
You're being very rough on him.
How to expand the obligations of the Community Reinvestment Act.
But Democrats blocked the reforms. Loans soared. Then the bubble burst. And taxpayers are on the hook for billions. Bill Clinton knows who is responsible.
I think the responsibility that the Democrats have may rest more in resisting any efforts by Republicans in the Congress or by me when I was president to put some standards and tighten up a little on Fannie Mae and Freddie Mac.
To expand the obligations of the Community Reinvestment Act, to expand the obligations of the Community Reinvestment Act, to expand the obligations of the Community Reinvestment Act